While you're reading this disclaimer, don't forget to subscribe, tap that like button, and make sure you remember to turn off the oven. Hey there, trading family. What's going on? Adam King here. We are in Unit 2, Video 2 of Future Basics, where we're going to be going over understanding cash settlement. And before I jump into the content, two quick notes. Number one is if this is all way too basic, you're really not interested in the ins and outs of what futures is or what is a cash settlement or some of the basics of the markets, and you really want to get into the trading, go ahead and scroll down into the description below, click on my free trading course, and then start going through that content so you can get to making money quicker. The reason why this is still all very important stuff is because once you know, like, underneath the hood how the engine's working, you're going to be able to drive that vehicle a little bit better. Is it 100% necessary? No. you don't need to know all of this stuff, but this is still very it's good to know for the long term of things, especially if you're going to be building your retirement in here and you want to learn, start using larger amounts of capital and understand swing trading over the course of a week or a month or what have you. So again, this is all good stuff, good content. So let's charge forward. And before we get in too deep, the second thing is if you're watching this on YouTube, click the other link in the description, access the free members area so you can get access to not only these videos, but all the slides for these videos, PDFs, guides, checklists, other resources, and obviously notifications of my free live training sessions where you can look over my shoulder and see what I'm trading on a daily basis. So check that out. So getting into the content here about understanding cash settlements. Again, now that we know how futures work from the last video, cash settlement is a key feature that makes futures unique. Now, contracts have expiration dates. So this can seem different if you're used to trading stocks or investing in a 401k or an IRA. And we're going to be covering what this means and how the contracts are named by their expiration dates in a future video. It's called the naming conventions. So be sure to like and subscribe. Watch this entire playlist of videos of this free futures course to get those details as well. Now, with most futures contracts, when the contract expires, you don't need to worry about taking delivery of 1,000 barrels of oil or a bushel of wheat or anything like that. Instead, contracts are what's called cash settled. That means when you close out of your position, the contract is settled by the cash difference between your purchase price and the settlement price without taking any physical delivery of that item. Okay, so again, cash settlement is beneficial for traders who want exposure to the asset price rather than the asset itself. This allows for faster, more liquid trading in the markets. This is just going to make future trading specifically more accessible to traders. So again, if you're trading a futures contract on the S&P 500, your profit and loss is calculated based on the index's closing value and the amount deposited or debited from your account accordingly. You know what I mean? So it's all going to be about when you buy and sell and which way the market moves. Now that you understand cash settlement, you'll see why futures trading is more flexible than other markets. So we're going to move into margins and how they work in futures here in the next video.